Joining us now, National Association of Realtors Chief Economist Lawrence Yun. Lawrence, thank you so much for being here. Obviously, listening to Powell earlier this hour, he had a number of points that he made about housing. He also said that the housing sector is showing signs of picking back up, but you think we might actually be at peak home ownership right now. What are your thoughts? Are you disagreeing with the chair?
Well, if the interest rates continue to rise, we are going to leave out many renters from converting into ownership. It has become a major challenge because of the rising interest rate, limited inventory condition, that home ownership opportunities for the younger generation will become increasingly difficult, which is the reason I'm glad that the Fed is acknowledging that rents should subside, which means that the overall CPI growth by December will easily be 2% or under. Given those conditions, the Fed should clearly make a signal that they will stop raising interest rate, so it will provide some opportunity for renters to seek out ownership in the future.
I can understand, obviously, mortgage rates sitting above 7% on average. The highest levels that we've seen since 2001 are certainly restrictive, but so is the supply. What are you seeing right now with regards to inventory levels?
You know, back in 2019, one complaint that we have heard from realtors was lack of supply. Back then, we had 2 million homes on the market. Today, it is half that level, only 1.1 million homes available in the marketplace. So that is limiting the inventory choices. Multiple offers still happening. Consequently, we are seeing prices beginning to rise again. The West region is very interesting. It saw a meaningful price decline early part of the year, but as soon as people saw price decline, they viewed it as a second chance opportunity and entered, and now prices in the West region are beginning to rise again. So there is clearly a solid demand out there. The question is whether the buyers will be permitted to enter the marketplace with the high interest rate environment, but if the interest rate begins to slide down, we will have more buyers returning to the market, but also pent-up sellers. Many sellers who are refusing to give up their 3% mortgage rate or current 7%, but I think they will begin to consider selling if the interest rates were a little lower, 6% or even lower. I think we will see an increased supply, increased inventory coming to the market.
Yeah, I mean, obviously it's a huge spread between the current prevailing mortgage rate and the average rate that people are holding right now who've been in their house for a little while. So who knows, you know, what the elasticity of that is in terms of sellers coming to market. But you see the industry becoming creative here. Obviously, new home builders are trying to buy down mortgage rates. It becomes expensive, but they're doing it. And then we see this program from Zillow, home loans offering 1% down payment in certain markets. What do you make of this? Is this something that can have an impact, or is it just a little bit of creativity around the edges?
Oh, well, you know, clearly the industry is so fiercely competitive. Everyone coming up with their own business plans. And I mean, this is a great thing about the free enterprise that America is offering. So many people will try different business models to offer what works for the consumers, what works in order to still get some profitability in the future. So there will be many business models. I'm glad the home builders are ramping up production. New home construction will actually exceed this year. The figures will exceed this year compared to last year because builders are ramping up production, but that is only small market share. Currently, only 15% of total sales, so we clearly need more inventory.
Lawrence, I keep reading about the danger of oversupply in multifamily in certain parts of the country where there's been a lot of migration inflow, southeast, maybe Austin, arguably. Does that make sense to you?
Well, you know, the job growth has been strongest in the southeastern states, Florida, Georgia, Carolinas, also in the Texas, very strong. So the apartment construction has been rampant, 40-year highs. And that is why, with so much empty units coming onto the market, maybe there will be temporary oversupply. But I think long-term, it will easily be occupied. But also, the 40-year high in multifamily construction means that rents will continue to subside. The logic is there. CPI growth will be easily under 2% by December. There's no reason the Fed should be considering raising interest rates.